Hey all, welcome to ShareTreck. This is Raj here. Friends, this is our weekend wrap up and looking ahead to the next week for genomic stocks. And today I have in mind 5 stocks that I'm going to talk about. One of them is Ginkgo Bioworks, other is Intelia, then we have ArcG, CRISPR, and Imatics. None of that I'm going to say is positive, but it's just a warning that there could be potential losses out there. I just want to highlight the risks that we face. And for that, I want to set a context for you, starting from the futures of NASDAQ and S&P, going into how we ended the NASDAQ and S&P on Friday, and then into these specific stocks, talking about technicals to give you an idea of how far things can go down in terms of price of these stocks, the potential that is there for prices going down, so that you can have that in your mind and keep that as something that can potentially be an extra information that you may use in order to make your investment decisions. Of course, all of these are my personal opinion. I'm sharing it with you because I'm following these stocks, and you may decide at your own risk what you want to do with these stocks. That said, let's get started. I want to start off with the S&P 500 futures. And when I look at the S&P 500 futures, I can see that it has landed bang on top of this diagonal line of support, which has been coming to us from 19th of February 2025 onwards. So it's got a lot of touch points, so it's a pretty reliable line, and it has, I think it's potentially been breached. We can't be too precise with these lines, but we are at least on the top or have breached that line. With that in mind, I would say that it's like the suspense in any television series where you have a very surprise ending for the episode, so that you have to come back again and watch the next episode and see how things go. People call it a cliffhanger. This is a definition of a cliffhanger out here. We don't know what's going to happen next, but we can imagine what could potentially happen next. Now, if I was to look at purely from a technical perspective, right, there are a few things I could do here. I could assume this to be a shoulder, this to be a head, and this to be another shoulder. And if I did that, then I could draw a target to come down. But right now, the setup seems to be quite bearish because our MACD is absolutely bearish. RSI is down, and RSI has gone down significantly. That means there has been heavy selling. And in the past, I think our RSI has gone down all the way up to, let me just draw a placeholder line here at the very bottom of what we see here. And then I'm just going to move this across to make sure that that is as low as we have gone. No, we have gone further than that. So let us keep it out here and then go back and see where we are right now. So we still have a little bit of area to drop. So that means that we can definitely test the support of this horizontal line of support at 5,525.50 for S&P 500 futures. Next, let's go to NASDAQ. NASDAQ has fallen below this diagonal line of support that we had drawn earlier, converting that line of support into a resistance. It opened higher and tried to pierce through this support. It opened just on top of the support, tried to go up, couldn't do that, and then it came back down, and it was protected by this diagonal line of resistance from a previous bear channel, which now acts as a support. So it's all working out wonderfully. If you look at the previous day, right, the previous day we came all the way down and we were protected by this diagonal line of support. So we ended the day just above the diagonal line of support. And what happened on Friday? On Friday, we opened just below the diagonal line of support, and we tried to go up, but we were pushed back down by this huge area of resistance that we have here. And then we never looked up. We came all the way down, and fortunately for us, this diagonal line of support held us up there. So we ended the day at around 19,361, that is 19,361. But we could probably go down further. And That is, if we breach this diagonal line of support, which could probably happen tomorrow, or I mean, when I say tomorrow, I mean Monday, because exactly like what we saw here, we had closed above the line of support, and the next day we opened below the line of support and could not go above it. The same thing could be repeated here. That potential is already there, especially because we have not seen any new news come up that is a positive news that could boost the sentiments of the market. And I'm recording this on the 29th of March at around 8:19 p.m. I haven't seen any great news that could boost the sentiments. So I'm going to assume that we're going to come down. And our next support is going to be 18,553.25 for NASDAQ futures. And 10-year yields have been coming down. This is in a way good because the money continues to stay in the stock market. So to that extent, it's good, and also good for the housing sector. Now let's go on to the indicators, which shows where we left the S&P 500. Now I have got all of these as 4-hour candles. So each of these candles is a 4-hour candle, and below this you are seeing the volumes. So the volume in the first 4 hours was slightly less than the volume in the second 4 hours. However, in the first 4 hours we dropped significantly, and we dropped almost 1.97% or 1.98%, and in the second 4 hours we managed to jump up a little bit, a wee little bit, not even I would say maybe 1% of whatever we have dropped. So the downward pressure was much more stronger, and the MACD became bearish, and our momentum also is way below average. We are not yet oversold, which means we have more scope to fall further. And how much can we fall? We can go all the way down to 5,548.29 when the market resumes on Monday. And that's going to be our first level of support. And I'm thinking that because this bear flag has been triggered out here, we are going to travel equivalent distance. So I have put this line out here. So we broke the bear flag out here. And therefore, I am thinking that we have a potential of falling all the way down to 5087.51. That is a huge drop. Even in the NASDAQ, we have a huge drop in the pipeline, as you will see now. So if you go to NASDAQ, same story here. We have broken the bear flag, and we broke the bear flag out here. So if I put the bear flag from there, we got a target of 16,995 or 16,900, something in that line. To be safe, I would say around 17,000, just to be safe. So at least this support is something that we may end up testing because the bear flag has been breached. However, technicals don't always have to come true, because fundamentals and news catalysts can triumph over technicals. So imagine if on Monday, Tuesday, Wednesday, Thursday, or Friday, Trump came out and said that, okay, forget all the tariffs. I'm just going to let us stop all this tariff business. Let us get back to where we were before. I have other more important things to do. If he does that, then you can imagine all this bear flag and other things will be gone. Immediately we'll jump back up again. So to that extent, this bear flag technical can be overridden. But right now, the way I look at it, without any positive news or any positive catalyst, our journey towards this ultimate goal of either 16,900 or 17,170 has already begun. And on Monday, we are going to see if we are going to open below this diagonal line of support and fail to go above it and therefore get pushed down, or are we going to be able to turn around? Turning around doesn't seem to be a possibility right now because MACD is bearish, momentum is also below average. It's not yet been oversold. Therefore, there is plenty of room for NASDAQ to fall below. And as you can see, in the past, we have gone way below on the RSI scale, all the way up to 21.13 as recently as 27th February. So anything is possible. The more harsh the sell-off is, the faster the RSI falls. And we'll see what happens on Monday. Keep this at the back of your mind, and also look at gold. For example, gold has been pushing at this resistance 3 or 4 times already, making the resistance weak. So I wouldn't be surprised if gold broke out of it by Monday. We'll see what happens, but the strength of gold indicates that people are not happy about the outcome in the economy. People are suspecting that things are going to be a little bad, and the government may probably have some loose money approach, and that's why the yields are falling, and that's why gold is becoming more expensive, because this is what will hold value. Now, having said that, let's go on to genomics. And in genomics, I just want to talk about a bunch of shares. That's all. I won't take too much of your time. First, let us look at Ginkgo Bioworks. Okay, Ginkgo Bioworks has triggered a really bad bear signal. It has got a double top out here, and this double top is going to be bearish. And I have put this green line out here, and this green line is the price target, and the price target is 5.31. Ginkgo Bioworks ended at 6.12. So there is potentially $1 and maybe 19 cents further to go down. So the way to handle this would be that if you can short Ginkgo Bioworks and get out close to 5.31 or at 5.00, you would still be able to make some money. But again, it depends on the premiums that are available for that kind of a shorting. The other thing you could do is, knowing that it's going to drop that much, if you're already invested in Ginkgo Bioworks and are in the red, you can use this information as an extra piece of information while you decide whether you want to hold or sell. So that said, the next stock I want to talk about is Intelia. I'm just picking stocks where I see some technical signals about which I can tell you something that I know. I'm looking at this chart here with this reverse head and shoulder for Intelia, and the reverse head and shoulder price target is somewhere around 6.50. We ended Friday at 8.07, which means that we still have a long way to go down. So if you add 1.5 to 6.5, you arrive at 8. So I would say roughly $1.50 is waiting to be lost on this stock, in my opinion, and that loss could happen suddenly if it dropped below this diagonal line of support, which it could possibly do on Monday, because it's been knocking at this line for 1, 2, 3, 4, 5 days. Remember, this diagonal line of support keeps on pushing the support down every subsequent day. So if it had remained a straight line, we would already have breached it. So I am thinking that the chances of Intelia breaching it on Monday is pretty high, especially because MACD is already bearish and momentum is also dropping. It's below average. And we have this technical price target out here of 6.5. So what you can do with this potentially is to short and get out by the time you reach 6.45 or something. And if you're not able to short, you can use the information as one of the extra piece of information you may consider while deciding whether you want to hold or you want to sell. So that's what I would say. And if you don't have Intelia, and if you want to buy Intelia, you could sell a put for maybe 6.4 or 6.3. That way you could collect the premium, and if you are lucky, you may end up not being assigned the shares. But if you get assigned the shares, you would have got it cheaper than what you would have wanted to buy it at. So that's the way I would look at it. Again, this is all personal opinion. This is what I am thinking. For you, your situation and circumstances might be different. So you have to do your own due diligence and consult your financial advisor before you do anything interesting. Let's look at ARCG. Now, in case of ARCG, we have triggered a bear flag. Now, let me draw this bear flag for you just so that you know what I'm talking about here. So this is one here, this one there. So I'm going to make this red, and I'm also going to make this red and make it a little thicker so that you can see it in your small screen, because I think many of you are watching these on iPhone or something like that. So our bear flag broke down somewhere around here. It came out from there. So from that point, if I was to measure, I think that we have a potential target of 16.97 based on this bear flag being breached. Okay, now this kind of a drop may or may not happen. There will be a lot of stoppages in between because when we look at this particular chart for ARCG, we do not have any resistance out here because we don't have any history. I'm going back to the past and I do not see any history at this level. Let me see. Oh yeah, we got some history here. So I'm going to plot some lines here because our stock market always remembers. So let me take a horizontal line of resistance, and I would say definitely out here we have some support, and if we go down further, I would say that we would have some support out here. You won't be able to see much because at that time ARCG was selling small amounts of shares, the volume was very low, so you didn't form those kind of candles. And then ultimately at the very bottom, I think I would put one here and one more at this bottom. You guys may not be able to see it in your small screen, but I see small dots out here which indicates the volumes on those particular days. There are lots of gaps up and down because it was very volatile in around 19th April 2016 for 10 or 15 days in that vicinity. It has been very volatile, so there was a lot of huge gap ups and downs. So I've marked some of these just to give you some rough guidance. I'll put one more out here. Yeah, that's enough for now. Let me find my way back to the present times. So we went very far back and we tried to dig out and find some supports that we can imagine. So I'm going to say that this support now has become resistance. It's a minor line of resistance, so I'm going to convert that into red. That done. If you look at this here, our next support is going to be at 19.57. So it's going to go the way down. It may do that in one day or it may do it in 5 or 6 days. So that I don't know how it's going to go, but that's where we are destined to go if this bear channel technical comes right. However, ARCG has a good chance of not going to that target because if any of the companies in ARCG, if they announce a collaboration, if they announce a merger, if they announce a BLA, if they announce clinical trial data, which is really promising, all of those things can prevent ARCG from going down. It can reduce the speed, but everything being constant and Trump not revising any of his policies, that's where we are going to, in my opinion. Next, let us look at CRISPR, the other company that I wanted to talk to you about. Now, in case of CRISPR Therapeutics, I think we have breached the bear flag. Let me change this and let me draw the bear flags out here. So I would say the top of the bear flag is out here and the bottom of the bear flag is out here, and we broke the bear flag somewhere at this point, and then we continued to travel ahead and then we finally came down. So if I assume this to be the bear flag, then this particular line, I'm putting it out here to start from this point, and therefore we have a target of 31.05 or 31.10. Now, how can I use this information if I want to have CRISPR in my portfolio? Well, I could sell a put for CRISPR and have a strike price below $31 so that, let us say I have a strike price of 29.4 or 29.5. So first I'll collect the premium and I'll wait. And if the share price goes down there, then I have the opportunity to exercise my right if it touches 29.5 because I would have got it cheaper than I would have wanted it. And at this point of time, I'm thinking 31.07 is a nice price for me to buy. But I sold the put at 29.5, so I get it 50 cents cheaper than what I would have bought otherwise. Plus, I get to collect the premium, which reduces my cost of CRISPR even further. And if I was already holding CRISPR Therapeutics and I wanted to dollar cost average down, instead of buying right now, I would sell a put for 29.5, and I would wait for the price to go down there, collect my premium that reduces my dollar cost, and then when I get the stock at 29.5, that will reduce it even further, and say the stock price doesn't go to 29.5. I can always buy a put, extinguish it, and then go and buy the stock in the open market at whatever price it is. It will still be lower than my current price, so it will dollar cost average it down. So that's the way I'm thinking about CRISPR Therapeutics. Your situation could be different, so you can look at your own individual situation and decide what you want to do with that information. Then I'm looking at IMTX, and if I look at IMTX out here, I see a dangerous possibility for IMTX, and I'm going to be very wary about IMTX. It has had good earnings. It has met and exceeded expectations, but the overall market is bad, and we have a shoulder here, we have a head here, and what comes next? The potential of a shoulder forming here cannot be ruled out. And if a shoulder got formed, then what would happen is we will have a reverse head and shoulder. And you guys know that reverse head and shoulder is a bearish pattern. So if I was to draw a line from there to here and then put it down on the shoulder, it could come somewhere out here, maybe 3.57. So that could be a drop out there. So that's a risk for IMTX. And at the very least, the risk is falling below this diagonal line of support. So that's what I wanted to talk to you guys today. And I want to just share my thoughts with you also. I've been investing for quite a long time as a retail investor. I don't claim to be an investment expert. I have not made that big a money for any claim for fame to give people advice. But I just want to share my thoughts and my experience. My experience is that in the past, when the markets have dropped like this, I had panicked and sold my positions. I haven't done that this time. For example, I'll tell you, I made a big mistake by buying a lot of FNGD. So I had a whole lot of FNGD and it was in severe negative. And FNGD, FNGU, all these leverage products, they are not supposed to be kept overnight. I made a mistake. I bought it. I forgot about it. I was busy making some video, doing something. I don't know what it was. But I decided to hold on, and now the FNGD has come back into profit, and now I can sell and take my money out. The reason is because if you look at the long-term market, I have showed you the chart of NASDAQ and S&P 500 over the last 10, 20 years. It's always up. But in between it goes down. So all these bad times do not last. However bad they may look and feel right now, it's not going to last. The markets are going to turn around. It's just a question of how long. That's where your age profile, your risk profile, your objectives, all of those come into play. I have a long-term investment horizon, and I'm also risk averse because I'm a retiree. But if you're a young person and if you have a long-time time horizon, this is the best time to dollar cost average on stocks in which you have high conviction. If you talk about genomics and you want to be ideologically wedded to genomics, the best stocks out here, I think, are Illumina and CRISPR Therapeutics and Vertex. Those are the stocks I think in our chart out here would be something that can be dollar cost averaged into. That's my personal opinion, of course. But I am personally dollar cost averaging into Google. I am dollar cost averaging into Meta. I'm dollar cost averaging into NVIDIA, and I'm dollar cost averaging into Microsoft. So these are the companies in which I am putting in my money. I'm also dollar cost averaging back into Berkshire Hathaway. I sold Berkshire Hathaway at around 40.10, and I took profits of around $4,900 or something like that in one portfolio. And in another portfolio, I have kept my Berkshire Hathaway as it is because I don't want to take the risk of not being able to have that at all in my portfolio. So the ones that I have sold here and taken the profit, I'm dollar cost averaging on my way down, so that at the end of it, I'll have all the Berkshire Hathaway shares I initially had, plus I would have booked profits. So that's the way I'm approaching it. And even with the Mag 5, right? Google, NASDAQ, Google, NVIDIA, Microsoft, and Meta, I had already taken profits at the peak, and I was sitting with the cash on the sidelines. I'm putting it back in right now. And I'm thinking that I'm willing to wait until end of this year or maybe even next year to make profits. And again, I'll be looking at technicals like this, and if there are short-term technical jumps, I don't mind selling it. If I see a head and shoulder developing or a double top developing, I wouldn't hesitate to sell, wait for it and buy again. Because one of the mistakes I have made in the past has been twofold. One is refusing to take profit, assuming that the profit is going to keep on going up. And therefore, I was on a roller coaster because the profit then suddenly disappears. And when the profit starts reducing, I think, no, it will turn around and it will go back up again. So I don't sell. And by the time it gets into a loss position, right, it's too late. And in the past, when it got into a loss position, that was when I used to sell. So I was acting contrary to the way I should have had. So I've learned that lesson. The other mistake I used to do was not buy when the stock was going down. I was buying when the stocks were going up. So I have learned that the stock market offers opportunities to make money going up and also going down. The really good investor would make money while going up and also while going down. The way you do that is that you should have plenty of stocks that you can sell piece by piece, so that the opposite of dollar cost averaging. So you sell 100 at a time of the stock and keep on getting more and more with every subsequent 100 that you sell. And once you have all the money, even if the market continues going up, you wait for it because the market is going to turn around. And when it starts going down, the moment it goes below the price at which you sold your last 100 shares, you become very interested in the market. And as it goes down, you start dollar cost averaging your way down and buy back everything that you had sold. And then do the same thing on the way back up. So this is the rhythm into which we have to be. We have to be in sync with that rhythm. It's very difficult. It's easier said than done. The mind and the news and social media, all of these play havoc with you and you can't stick to it. So that's the lesson I learned. And this year I'm playing it much better. The best thing that for me today is that I'm looking at my FNGD, which was horrendously red 2 months ago. It's now back into the green. I'm going to make my money out there, and I'm going to start dollar cost averaging on FNGB and ride it the way down, so that when FNGD comes to the peak, I'll sell it all off and I'll be buying FNGB. I'll be selling FNGB and I'll be buying FNGD again on the way back down. So this is the way I'm planning for this year. I'm not looking at genomics at all for this year because none of the companies have got the potential to give me the kind of risk appetite that I have, and that's why I'm not looking at it. But if CRISPR Therapeutics were to get a BLA for maybe one of the diabetes therapies or for cancer or anything, then I'll definitely try to get into CRISPR dollar cost average into it and have it as a long-term holding because it has got great potential. Also, if I see in the news report and geopolitical commentary that US-China relationship is thawing, I'll start looking very closely at Illumina, because that's when I would like to start nibbling into Illumina. And the other lesson I learned is that we should not put all our portfolio into one stock. You may have a winning play, but don't keep on putting money into it. We have to diversify. Therefore, I'll always have a certain amount of money to put into genomics. So friends, this is what I'm thinking. And many of you are experienced investors yourself, and you have been following genomics for quite a while. So if you find any flaws in my thinking, please feel free to put it in the comment section, because that will be your way of teaching me something new, and I would gracefully accept your lessons. The way I'm preaching out here, I would like to hear from you as well, and it will help me to become a better investor as well. That's the objective of our ShareTreck community. It's more to have fun and make investing much more productive. So with that, my friends, I would like to bring this video to an end. I hope you guys have a great weekend. Thanks and have a great day. Bye for now. And before I go, a shout out to Inf, who is holidaying, and I hope he has a great holiday. See you later.